Good morning and welcome to the market update for March 9, 2020. Today's update comes after a material change in the equity action call this past Friday, with a move to the neutral yellow zone. This negative direction is compounded by overnight global equity markets weakness and a thrashing of crude prices. Let's dig into some charts. The first chart I want to look at today is the equity action call. On March 3rd, we did the update. We were still sitting in the green zone. Since then, we've moved down to the yellow zone as of Friday's close. This suggests to us that equity is now neutral to alternative asset classes such as commodities, bonds, currencies, and cash. So we should not expect strong equity returns when we're in the yellow zone, and more risk is warranted and more safety warranted. So many of our strategies at SIA Wealth Management will move to cash positions during the yellow zone as we sell off individual securities on their stop losses, and we will watch and see if the current weakness moves us to the red zone anytime soon. So what changed to move us to the yellow zone? It really comes down to one of the major asset classes that are alternative to our equities, and that's bonds. Bonds have moved from the 5th position up to the 1st position in our asset class rankings. U.S. equity was pushed down 1, commodities was pushed down 1, and Canadian equity was pushed down below international equity on weakness of crude oil and as well as potential political unrest within the Canadian marketplace. Looking forward, our risk of going to the red zone would be seeing currencies move up. We're seeing strong activities in currency markets overnight, with U.S. dollar rallying against many of the commodity-based economies such as Australia and Canada, but also weakening against other currencies such as Japan and the euro. So it's an interesting time on currencies. We will see how the activities of today play out, but we will be watching closely to see if U.S. equity can also hold up in the second place, which is the last equity position that is still within the top 2 asset classes. The first chart I want to take a look at is the SIACharts Market Equal Weight Index. We updated this chart on March 3rd. It is an equal weight basket of U.S., Canadian, international equities developed and operated at SIACharts. We can see on the chart that we are currently sitting above key resistance. It has moved down 1.0 since from March 3rd until March 6th, but with today's activity where the markets are showing down in the 7% to 9% range, we should expect it to probably take a run at and test those lows or the support level above 59,431. So if we're going to remain bullish on equities, we would hope that that support level can survive today. But we are looking at a negative S-max, which is a 5, which shows that equities are weak on a short-term basis, and we will just see if that consolidation period that we've seen that started back in 2017 can hold up and we return to rally mode, or do we go into new lows and test some of those lows of the latter part of 2018. A key chart to look at is on a comparison is the SIA Market Equal Weight Index versus the SIA Bond Equal Weight Index. We can see on March 3rd, I replicated the black box that's sitting there. We were sitting at a support level where the 3 is located in the bottom right corner of that. We have subsequently, as of March 6th, moved through that support level. That is not a great sign, but it does show us the strength that fixed income has seen from the update on March 3rd up until the 6th. Bonds now being our top asset class within our asset class rankings. This is very important. So key levels looking at this chart now, we want to see that we don't break that support level that I've highlighted back, which is June of 2017 and September of the same year, 2017. If we see that level broken out, that really is a significant disruptor to the market and would replicate some of the weakness that we've seen back in 2016, where we saw the comparison between equal weight equities and equal weight fixed income really move strongly in fixed income favor. With today's activity, we should expect that we'll be close to this level and hopefully not through it. If we do go through it, we'll certainly report that this evening or tomorrow morning. Today we're looking at, or the next chart we're looking at is SIA US Equity Equal Weight Index. This is the strongest equity asset class, currently sitting at key support, so it had not changed all but an O from our last update on March 3rd, just a few days ago. Given that we're looking at downward movement in that 7% range, if we were to close there today, we would be near that next support level. So not really a breakdown of massive significance on the longer term uptrend of it, but certainly if we do move down to that level, be one of the more significant weaknesses that we've seen. 2018, 2016, 2011 would be the only other times since the bull market started back in the early part of 2009 that we would see movements down of that size. So we'll wait and see how the market closes today. If it continues to close or trade at these levels, we should be in a situation very similar to those markets as we sit at the close. But time will tell, and we'll see how the market finishes today. Looking at Canadian equity, certainly a lot more concern with Canadian equity. It currently is sitting on support, just as U.S. equity is, but it is also faced with a stronger downturn today based on weaker crude prices. So again, looking at about a 9% decline as we're sitting recording today. This would bring it down to key support again above that 28,003 level. So very, very similar charts when we look at the market EWI, the U.S. equity EWI, the Canadian equity EWI. If things close as we are trading today, we will be on key support, not completely broken down on these charts, but all indicators on a short-term basis really have moved negative based on what's happened with the coronavirus and now what we've seen with crude oil. The next chart I want to look at is crude oil. We've seen crude trade down over 20%. This is largely being motivated by Saudi and Russia discourse over what to do as far as supply to the market. The Saudis announced that they will be adding more crude to the market in light of conversations with the Russians that did not facilitate cuts in production as the Russians were more concerned about putting pressure on shale producers within the United States. We're currently trading around $32 as this presentation is being recorded, with 2016 support above $27.52. So there has been some talk. Analysts such as Goldman Sachs are calling for $20 oil. We can see that December 1998 levels are above $24.44. It would be quite something to see crude fall to those levels, but given the unrest that we're seeing between oil producers in the market today, certainly not out of the realm of possibility. Again, we will watch that. I've added a red arrow showing where the markets have traded down as of the recording of this update today. So there is support that's a couple dollars below where we're currently trading, and potentially, if we should see a rally back during the day, that 36, 32 level may hold for us if we see any reversals through the day. The last chart that we're going to look at from a technical standpoint is gold. We're going to look at this chart because it really was benefiting from some of the unrest. What's happened with coronavirus already was in a bull market status as we moved into this potential crisis. It has traded as high as, or over 1,700 intraday, but has settled back down to that 1,649 level. So it's a bit surprising to see with the currency moves that we've seen today, some of the unrest on crude prices, that we have not rallied a bit stronger. So it might smell of a little bit of intervention by central banks, or maybe we're seeing a situation where people are not entirely running to this area, more to the fixed income side for a safety play on what's happening around the world. So we'll watch that. That 1715 level seems like an elusive resistance level at this moment in time. We will watch that and see if it gets taken out, which I think would signify a shot for it to go reach after its 2011 highs. The last chart that we are going to look at today is the S&P 500. I had this in the last update March 3rd. We can see that the uptrend remains in place, and I think this is an important chart for us to take away from this update today is that we, to date, have not moved down through our major uptrend in equity markets. If you go back to the EWI 900, our market equal weight index, the U.S. equal weight index, the Canadian equal weight index, and you could even look at the international equal weight index that I didn't have in this presentation today. They all remain in uptrend status, so the longer term trends remain in place. What we're seeing on this chart is that the red arrow that I've added to it shows us moving right down to key support on that uptrend. This is an important point, but we can take to our clients right now that although this has come fast and furious over the last couple of weeks, we still remain in a bull market status as far as the trend lines within equity markets. This is all short-term in nature, and the key risk to us as equity players is to see that equity action call go into red and to see these uptrend lines taken out at this time. So overall, coronavirus has certainly brought a lot of downturn into the marketplace, but I would suggest that more of the downturn we're seeing in the trading today is related to unrest between policymakers, specifically what's going on between the Saudis and the Russians on their crude. If we think back to the extended bull market that we've been in since the early part of 2009 and after the crisis of 2008, we've seen policymakers get along extremely well, whether that was on a monetary or fiscal basis. They've all come to terms and worked the strategies to alleviate market concerns together. And we are starting to see many wrinkles in the armor over the last number of years politically, and certainly we can see that in our home country of Canada as well, where there is significant political unrest. We are seeing that globally in many markets in the UK and the United States, and now we're seeing other policymakers in some smaller regions that have strong influence having unrest too. So it looks like at this moment in time we're in the yellow zone. If we should move to the red, those policymakers are going to have their work cut out for them. They certainly do at this moment in time. It'll be interesting to see how the trading closes today, but we'll watch closely and have another update for you if that happens. With that, I'm going to turn off the market update, and as always, myself and the team at SIA Wealth Management is available for conversations with you. If you have any questions or would like to talk about how our products are dealing with the uncertainty recently, certainly reach out to myself or Paul Vandrinsky, our portfolio manager, or Kyle Wilson, our co-portfolio managers. Thank you for your time. Talk to you soon.